we'll keep it on the desk because everybody does own NVIDIA. Joe, you want to take this one while we work on Josh's audio?
All you need to do is just look at the growth of revenue. It's absolutely staggering. $26 billion in 2023, $60 billion in 2024, $130 billion in 2025. Estimate for 26, 206, 276 in 27, 321 in 28. I mean, that's just historic. It's unprecedented, something we have never seen in the capital markets, and it's the reason behind the astronomical performance that this company is exhibiting.
So the target goes to 210 today from 200 at Citi on higher AI infrastructure. The target at KeyBank is now 250. We'll go back to Josh Brown as we've fixed his audio. So I don't need to look to the side and do like, what's up with that? I can't hear anything because I'm told now I can.
My bad.
All right, there we go.
Look,
here we go.
I think the big takeaway for investors from this whole era is that sometimes the most obvious way to play a theme is the most obvious way to play a theme. You have to remember, 25 years ago, I was a retail stockbroker, and we were trading the original .com boom. And every time a stock would make a huge move, like a Dell computer or a Cisco or a JDS Uniphase or a Lucent Technology, my clients would be like, okay, but what's the next, right? What's the next Lucent? What's the next Cisco? And we would end up in stocks that would obviously blow up, like Ciena, and we would end up in things like Juniper Networks and Sycamore. The old timers watching the show will be chuckling along with me. NVIDIA is still the most obvious way to play the AI build-out theme. Just look at the CoreWeave deal today. It's a $14.2 billion agreement with Meta. It's great for CoreWeave because it diversifies them a little bit away from Microsoft and adds another monster company to their roster of clients in a very big way. But what does Meta get out of this? They're getting access to NVIDIA's Grace Blackwell 300 systems because CoreWeave already has that infrastructure in place and ready to go. All of this benefit accrues to NVIDIA in the end. So it may not go up the most from here relative to other AI plays, but it is the foolproof name for people that want to gain sector exposure or want to gain thematic exposure. And I don't really see that changing. They've got this unbelievable competitive position. We've been talking about it on the show forever because it's true. And everyone's always like, well, what's the next? What's the new NVIDIA? There are other ways to play AI. We've seen other chip companies work out. I've talked about Lam Research on the show. We've had Broadcom, we've had AMD. But in the end, I still think people would be better off looking for the obvious answers and defaulting to them. And if you've done that with NVIDIA, congratulations. We're now breaking into a new range, and who knows how high this one can go.
Well, the question is what to do with it from here. The stock's up 18% in the third quarter. I know you're not. I do find it interesting, Amy, that you're trimming NVIDIA here. Why now?
Well, we've trimmed it. We've owned it since 2014, so we've trimmed it along the way up. Every sale has been a bad sale so far. Obviously, it's making an new all-time high.
So why is this time going to be different?
I'm not sure it will be different. I just think I agree with everything Josh said. This is the most obvious play. We're not selling out of it. But I do think it's prudent, as the position keeps getting larger, to just keep it in line. I do think at $4.5 trillion, you're kind of asking yourself, okay, what's the upside?
I mean, you know what?
Right.
If Brad Gerstner was here right now, you know what he would tell you the upside is? Because he said it this past weekend with Jensen Huang in his podcast with Bill Gurley. The upside's $10 trillion. Market cap.
Market cap.
That's
okay.
not 10 more trillion from here. But you're talking about a $10 trillion market cap.
A double from here. I think that's a while away. And I think, and with NVIDIA, you do get opportunities to sort of go back in. It hasn't been a straight line up. And I do think you're seeing more articles about what the return on this AI, as Joe said, the trillions of dollars that are going into AI CapEx right now. What's the return on that? When are we going to start to see that? I think you will get people questioning that again on the way up if it eventually gets to 10 trillion, which again, we'll see.
I mean, this remains a key question as Wolf, Jim, talks about AI spending expectations and how it's the biggest driver of market performance. So the hyperscalers are tripping over one another to continue to spend tens of billions of dollars towards their AI, their build-outs. And for now, it's great. And that's why Citi has raised its forecast for the hyperscalers to continue to spend the way they are. The moment, and who knows when it's going to be, could be next year, could be 10 years from now, who knows. The moment that there's a comment about spending less in CapEx, is that the moment that everybody says, oh no?
Yes, it is, Scott. But I think to the setup of your question, that we're probably a long way away from that. And it's not just because those hyperscalers have made such bold announcements, really quite frequently and quite recently. But it's also, there's other aspects to this that I don't think we give enough attention to, like the international exposure for AI buildouts. Let's not forget, just a few months ago, the President Trump visit to Saudi Arabia, the data center buildouts that are going on in the Middle East. Europe doesn't want to left behind. Asia doesn't want to get left behind. So I really don't think that, when you consider international, I don't think that moment of truth, if we'll call it that, is anytime soon.
Let's look at NVIDIA again, guys. Put it back up for me, please, and take it out at least a year, just to show you it's not immune to sell downs.
Yeah.
We've seen it happen. And give me a year now, if you could, because it didn't happen that long ago.
It did.
If you look at the 1 year, it was in the spring that the stock had that reset. It got into the 90s.
It did, along with
here we are with a reboot, a double since then.
It did, along with the market, and it really was a source of liquidity, an ATM, if you would, at that point. I think if you're owning NVIDIA, you're asking yourself the question. Jim nails it. I mean, and you brought it up to Jim, Scott. It is all the risk surrounds the spending slows. Okay, how are we funding the spending right now? If you take the Mag 7, obviously NVIDIA is not going to be part of this, and you also put Tesla to the sidelines, you're left with 5 companies who have $480 billion in free cash flow from operations this year to spend on the build-out.
Citi says CapEx across the hyperscalers is going to increase in 26 from 420 to 490 billion, right? So you're approaching $500 billion in spend. And through 2029, from 2.3 trillion to near 3 to 2.8. So you're already looking out to 29. I mean, are we buying these stocks today trying to guess what 2029 is going to look like? If we're suggesting that a lot of the market performance is in fact being driven by the spend, as Wolf suggests.
I would be remarkably surprised if along the journey to 2029, there is not some form of a stumble, whether it's in the economy, that allows that free cash flow grow, not to continue at the pace that we've seen it over the last several years. So I think you have to be prepared for that. It doesn't mean I want to sell NVIDIA. It doesn't mean at the end of that journey in 2029 and 2030, NVIDIA is still not the winner, but you just have to set the expectation. This is all about the ability to generate free cash flow. And there could be some form of a stumble where these 5 companies don't gather the free cash flow at the rate they're currently.
And remember, AI revenue this year is projected to be about $20 billion. So you're talking about numbers getting to trillions of dollars to spend. Yes, of course, I think the revenue will ramp, but that revenue has to ramp pretty damn fast at some point to justify these CapEx levels.
Morgan Stanley's Katie Huberty says the quote, everything rally will persist for now, but given the rich asset valuations, they suggest own quality. Which is obviously extends far beyond the mega caps. We totally get it. Major averages in this quarter, we should show you just to give you the scorecard really of where we are. In Q3, the S&P up 7%, NASDAQ's up 10.5% in the quarter, the Dow up 4.5%, and the Russell, Amy, is up 11%. Yep. So as we're talking about, okay, earnings going to be good, Fed's embarking on rate cuts, and maybe the broadening trade's going to work out. Does the fourth quarter end up looking a lot like the third, or no?
I'm not sure at the fourth quarter. I mean, I think the rally does continue. I don't think it continues necessarily at this pace.
Everything rally.
But it's not only the U.S. Ex-U.S. is doing even better. I mean, I've spoken about Santander on this program many times. It's up 130% year to date. So, like NVIDIA, as to Josh's point, isn't one of the best performing stocks in our portfolio this year. It's Franco. It's ABB. It's IonQ. I mean, it's a broad. I have almost over half the portfolio up over 20% year to date. There's a lot of stocks that are working really, really well, including the financials and Goldman and JP Morgan, which, as you'll know, I just trimmed as well and added to Berkshire. But there's just a lot of good news now baked into a lot of these stocks that we've had major moves. Goldman's up 70%.
Is that why you trimmed Goldman and JPM?
Yes,
because of the moves that they've had?
Yeah, over the last 52 weeks, Goldman's up 70%, JP Morgan's up 50%. Berkshire's up 10%, to Josh's point. So we took some out of those two names, put it into Berkshire. But we also own a lot of Japanese banks that are doing really well.
What do you make of the way Berkshire's traded since Mr. Buffett made the announcement he did?
I don't think it's that surprising that it took a pause after he made the announcement, but I really think Berkshire is like insurance. I mean, it's insurance literally, but it's also insurance if you do get a slowdown in the economy, if you do get the market rolling over. They have a huge cash pile that they could put to work pretty effectively. I think the team in place is totally qualified to do that. I
think everybody's trying to assess where the best places to be are for the remainder of the year, whether it's sector or individual names. And some firms on Wall Street are out with their own list today. Some of the names may not surprise you. For example, UBS has their highest conviction calls. Okay, Amazon's on the list. Everybody owns Amazon on this show. I think it's interesting. Disney is on their list. So if people are looking for names outside of the Mag 7, well, here's your Disney.
Wow, fireworks.
Yeah, well, Disney had a great start to the year. It's kind of consolidated here. I almost said sputter because it's on the border between consolidating and sputtering. It needs to get some mojo back. The only thing that's going to do that is earnings and the sign that streaming is picking up more and more steam as linear declines. And streaming should be picking up steam, not just from the regular content, but from ESPN. Obviously, the theme park's doing well. And I think what we're talking about right now...
You didn't even talk about Succession, which is the biggest issue hanging over the whole story.
Listen, it is a very big issue. I don't think that it's make or break on the stock. I think it's important. I'm not saying that, but let's face it. There's some very talented people behind Mr. Iger. I mean, there's Josh D'Amaro. I might have got his name slightly wrong. Excuse me. The theme parks. There's Dana. I'm sorry for forgetting her name. The TV and film. Thank you. Sorry. There's a very talented bench.
Note to self: don't mention names if you don't know the names.
I got half of it right. Give me some credit there. Also, I knew with a good team like this that I'd get back up. This exactly is what I'm talking about. If you got a good team, you got backup.
Yeah. Like note to people on a debate, for example. Don't make a list if you can't remember the list. You know what I'm saying? You know what I'm talking about.
We do.
All right. AppLovin is on the list. Joe T.
It is. And I talked yesterday on the show about the skepticism that I still think is built in the stock price in the analyst community. The price target way below the current price at $700 today. In addition to that, the ad platform continues to grow. They're delivering on the revenue growth. There was a point several weeks ago I was skeptical that this could continue. Thanks heavens that Joe T is a rules-based strategy kept us anchored into that position, didn't allow me to make a foolish move.
Snowflake is on the list.
Snowflake, a software name also related to AI, getting that bump, had done really well year to date. Very, very expensive.
It's differentiated itself from some of the other software stocks in the conversation over whether, AI is going to kill software.
Right.
It's definitely hurt some software stocks, not this one.
Right. No, you need Snowflake to organize your data and to make sure that you can use AI. So it has differentiated itself, and it has a unique position. You're paying for it, though.
MasterCard?
Yeah. Listen, MasterCard's been one of our longer holdings for the better course of the last 4 years. Now you're hearing both Visa and MasterCard enter the conversation as it relates to stable coins. That might be a tremendous opportunity for two companies that are well diversified in their model.
Do I have any interest in Wealthfront, the company filing for an IPO? Obviously in the fintech space. We've talked about it on this program before, and I think we did numerous times, this sort of robo-advisor. Automated investing almost. Josh, I know you have thoughts on this. And so now the company's going to go public, and we've discussed this with you before, both the concept and the company.
They have to go public. They have VCs trapped in this stock for 13 years. This marketplace was not supposed to develop the way that it did. if you rewind back to the 2012, 2014 period when these robo companies first came along, they were like very good at what they did, but they were a little bit too vocal about it. And what ended up happening was Vanguard and Schwab decided, hey, we could do that too. And then Merrill Edge digitized, and then Fidelity. And of course, there's Betterment out there as well as the other standalone. And what ended up happening was robo-advice became kind of this like commodity offering that everyone has. SoFi has it too. Robinhood has it too. So there's really nothing that they do that's unique. They did have a head start by virtue of how early they were founded, but that really doesn't matter anymore. This is basically just a marketing CAC business. Like, how much money do I have to spend to get my next 1,000 clients? And that's never a great business. I think it's notable that Wealthfront tried to sell itself to UBS. UBS preferred to pay the breakup fee and get itself out of that deal rather than consummate it. I don't know what they saw that spooked them. So now a couple of years has passed since then. And finally, you have the type of tape where Robinhood's making record highs, SoFi's exploding higher. It's a tape that's more hospitable to these types of fintech investment sort of platforms. So I think it's great timing to be selling it to the public today, just because people want these types of companies. I don't know that that means it's going to be a great investment once it comes out. So this is the type of thing where I'd rather just be a spectator and we'll all find out together how much appetite there truly is for a business like this.
Josh Brown, your final trade's what?
Sticking with NVIDIA, not selling.
All right. $4.5 trillion in market cap today. It is a new record high on this final day of the quarter. Farmer Jim.
Lockheed Martin, it had a rough summer, but it's really making a nice run here. It's up 10% for the month. It's in positive territory for the year, and we understand what the drivers are. It should continue.
Okay. Amy Raskin.
Regeneron, we talked about it earlier. Maybe some of the healthcare, healthcare might be turning a corner now that we got the news out about the pharma pricing.
Well, today, certainly leading the way after the drug pricing plan with Pfizer announced in the Oval Office with the president. Joe T.
Amphenol, been in Joe T since inception of November of 2020, continues to just work and move higher.
Richard Saperstein is that person. He's with Treasury Partners. He joins us now. It's good to see you again.
Likewise.
So we're like 42 minutes in. Not a single person on the show today said they're worried about anything. The consensus was stocks are going higher between now and the end of the year. Is that a justified feeling?
Well, by all means, the equity market is overvalued. Whether it's on 25 earnings, 26 earnings, or even 27 earnings. However, we're still fully invested, and I think investors have to recognize that we're up 115% in 5 years. Maybe their asset allocations are tilted too much to equity. So here's a position where you might trim equity and move it into fixed income, or you might take highly valued stocks that have appreciated, donate it to a donor-advised funds. There are things you could do now to reduce your exposure.
Well, I mean, I think it was Jeffrey Gundlach said, hey, 25% in gold. Gold's going up. Now, I know that may be a large number to somebody like you, but the point being that you should be loading up in areas other than equities, perhaps because the reasons that you said. Valuations are rich by historical standards. How do you assess that?
We're loading up on high-grade, long-term municipal bonds. We've been doing that. Yeah. But within the stock market, there are great theses you can have and still have an excellent stock portfolio. So it isn't as if you've got to exit stocks across the board. First, look at the asset allocation and then find the sectors you want to be in.
But you say you should rotate out of small and mid-cap stocks when some people are just saying to themselves, hey, now's the time to finally lean in.
Disagree.
You say get out.
Right.
Why?
Because there's been a sea change in the market cap structure. First of all, companies are waiting a lot longer as private companies before they go public. And when they go public, they're jumping right over SMID and right into large cap. Secondly, most SMIDs are funded through floating rate debt. And so the argument now is, well, if the Fed cuts, rates are going to go down, their cost of capital will go down. I don't want to buy companies based on cost of capital. And finally, with the advent of ETFs, most investor money might go into SPY, and 40% of that is large cap tech. So that's where I want to be.
So you still see the large cap tech trade as outperforming the rest of the market over the remainder of this year?
For decades. And here's why.
You mean for decades to come?
Yeah, we've gone from the PC to the internet, cellular, mobility, cloud, and now we're in AI. These are evolutionary changes. And most investors are underweight these sectors and are not taking advantage of this type of growth. Sure, the stocks are very expensive and they'll pull back, but it's a great time to add for the long term.
And so you don't, when people talk about a bubble in this area, you don't pay any attention to that?
Well, naturally, what was going on with NVIDIA and the circular nature of the Oracle AI deal, at first glance, could look like the start of a bubble. But if you're running NVIDIA and you got $400 billion of operating cash flow in the next 4 years, and you're going to reinvest in the sector you know best, which is feed your little seedlings around the country and further your business.
Outside of tech, in the equity market, what's your favorite area?
Independent power producers, Vistra
Still.
and NRG, still, yeah.
But I mean, that's the AI story.
It is. A lot of our investments are circular around the core AI story. We also own banks, so we think the banks in a recovering economy are going to do very well. And look at what's, JP Morgan, Bank of America, Wells Fargo.
You don't think there's a bubble in any of the utility plays? Like, these are the new growth stocks. You know what I'm saying?
But
like, people are treating them like the hyperscalers or big tech growth names that they would invest in before.
Right.
Boring old utilities, which used to be a safety play, a proxy on yields. Now we're literally treating them like they are the new growth stocks.
Let's separate between the regulated and the independent power producers. The two IPPs that I own, Vistra and NRG, have operating cash flows of 9 and 10%. Now, they're reinvesting back in their business and they're expanding their capacity. So also, they're managing their balance sheet. Vistra has retired 30% of their float since I bought it originally in 2021. It's up 10 times since I bought it.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Tuesday. It's 7:37 p.m. Eastern Time. The market obviously is closed now. And in this video, we're going to go over the markets. We're going to look at the indices here. We're going to take a look at some news like Nike, for example, predicting $1.5 billion in costs from tariffs. Wow, that was from the Wall Street Journal. What else are we going to talk about? Stock futures are lower as government shutdown looms. So we're going to look at how the stocks are performing after hours. Okay. We'll also take a look at the following. We're going to go into the following ETFs. The SPY, the Qs, the Dow, the Euro stocks, which did really well today. Okay. One of their ETFs, FEZ. We're going to look at some of the stocks they talked about on today's halftime report. You saw some clips there from the halftime report and from closing bell. So we're going to cover some of those stocks, like the ones that you see here on the left. I've highlighted the ones that are the strongest with the little blue flag that you see right there. The ones on the bottom are not looking so great technically. Maybe there's something off about it. I'll discuss that. We'll take a look at some of the Mag 7s like Tesla, Apple, and Meta. And we've got a couple of stocks from our members, B and CVE. So let's do this, guys. Let's get into what happened today. What happened? All right. Because we've got some, the fact that tomorrow, with this government shutdown looming, this is going to be an issue, obviously. So Dow Jones today, though, we can talk about what's happened today. And we can see that here, this right here was yesterday's closing price, this level. And you can see it dropped in the morning. And around 11 a.m. it started to recover, came back to that prior day's closing price, dropped, creating a higher low. So we've got a little bit of a higher low right there, and then it broke through that level. So that's a bullish sign, okay, for the Dow, but it was only up 0.18%. It did not move much. NASDAQ, all right, here was the closing price here. You can see it basically stayed under for a little while, and then it around a little after 3:30 p.m. or so, it started to move up. It was only up 0.30. S&P 500, it stayed under that prior day's closing price throughout that whole day right there, and then towards the end of the day was up 0.41. Russell 2000, here's the closing price from yesterday. You can see it dropped. It actually did not create a higher low. Okay, so see how this low is actually lower than the other one, but it did take out this prior high. All right, so that's positive, and they move up. It only moved up 0.14%. Let's take a look at the heat map here. As you can see, NVIDIA was up. Okay, so it closed up 2.6%. A lot of the healthcare stocks did well today. Eli Lilly, for example, was up 5.02. Merck was up 6.81. Amgen up over 3%. AbbVie up over 3.7. Pfizer up over 6.8%. Johnson & Johnson was up. A lot of the diagnostic stocks did well, but the energy stocks were down a bit today. Utilities were okay. Industrials did all right. Financials kind of got hit a little bit, except for Visa and MasterCard, and Berkshire was up 0.7%. You can see Amazon down, Google down slightly, Meta down 1.2%, Tesla up 0.3%. Consumer defensives were all right. So let's also take a look at the sectors real quick. Oh, you know what? Before we do that, I just want to show you guys what's going on after hours. One of the cool things about FinViz Elite is the fact that I can select this little box here, and we can look at to see what's going on after hours. So let's see. And there you have it. So the markets are slightly down after the close. One of the stocks that did well, or is doing well after hours, is Nike, because it came out with their earnings. But let me show you guys. If we go to the news section here real quick, and we type in NKE for Nike, and I mean that chart doesn't look particularly great here. As you can see on the daily chart, it's under, or it's inside the cloud right now, but it's looking pretty bearish on the weekly chart. Not looking that great either. But like I said, year to date, it's down 7.85%. But it does say here at 6:21 p.m. Nike shares rally on progress and turnaround. You can see there after hours is up 3.8. But literally, let's see, literally 9 minutes later at 6:30 p.m., that's when this article came out. The Wall Street Journal article. Nike predicts its tariff costs will reach $1.5 billion for the fiscal year. That's a lot of money. A lot of money, which would be profits for the company, but no, it's going to be going into paying tariffs. So, because they're the importing company, right? So let's take a look at the other thing here too. We want to take a look. Actually, you know what? Let's look at the sectors. That's right. I almost forgot. Let's go back. Go over here to the groups segment, and let's see how the sectors perform. You can see healthcare, like I said earlier, up 2.12%. Industrials, technology, basic materials, utilities were all up today. Real estate up slightly. Energy down 0.91%. And there's the 1 week performance. Okay. Let's get into the rest of the stuff now. So we're going to run through these quickly. We're not going to spend too much time on each one. We don't really need to, because we're using a really cool indicator called Ichimoku, which is Japanese, and it stands for at a glance. Okay, so at a glance, we can quickly assess what's going on. It might look a little confusing. Don't worry, I'm going to help you guys figure this out. All we need really is to see where price is in relation to the moving averages. And if price, which is these little Japanese candlesticks, okay, this is today's, for example. All right, if that's above the green line and the red line and the cloud itself, that's very bullish. And we've been above the cloud now for quite a while. You can see that we broke through that level right there back on May 12th. And since then, we've been up 14.68% for the SPY. Okay. So it looks still very bullish here on the daily chart. Here's the QQQ ETF. That also looks good. Okay. It was up 0.27%, and it's up above, holding above the Tenkan-sen still. Dow Jones, okay, same thing, still above the moving averages. One thing to note is that it is kind of moving sideways here, right? So it's kind of like building a little bit of a consolidation box, and we'll see what happens with this. But sometimes, if price breaks under, that could be very bearish for it. But if it breaks above that level, expect an expansion to the upside. Of course, a lot of that's going to be based on what happens with, the shutdown situation. How about FEZ, Euro stocks? Now, this is an interesting area that I talked about, yesterday on Monday, and I talked about it on Friday as well. I said, hey, guys, especially like you can see here on Friday, I talked about how I liked the fact that it found support down here at the Kijun-sen. All right. And then on Friday, you can see that candle jumped. It gapped above the moving average, the 9 period, the green line, the Tenkan-sen. Okay. and then it's been moving up. Now it got above this 6150 level yesterday, so I said that's really bullish. I like that too. It was up, the most out of all the indices yesterday as well. And then today it's up 0.62%. Check out the other ones. Dow's only up 0.15, Q's up 0.27, and SPY up 0.38. Russell up only 0.14, but the Euro stock's doing really well. So this is another way to, another place to invest, maybe until there's some clarity on what's going on with, this whole shutdown situation. You don't want to go too bullish at this particular moment in time. The VIX was up 0.99%, which is not that much, but it was up 0.99%. VIX represents volatility, and you can see here it was up just slightly, okay? Now, and that's fear, basically, fear in the markets. All right, let's get into the stocks they talked about on CNBC, those clips that we just saw. We're going to, now, like I said, I've got them all highlighted here, the top one. So we'll start off with the most technically sound stocks and ETFs that look good on both the daily and weekly chart. So as you can see here, AppLovin has been on a tear actually for a long time now. If we measure from this point right here where it got above the Ichimoku cloud, which would have made a perfect time to enter the stock, okay, back on July 31st, you'd be up 88.95%. Of course, that's all, after, how can you know for sure where the stock is going to go? But I'm just saying, you have a higher probability, folks, when you use Ichimoku and if price is above the cloud and you take the trade, that it's going to move up. Now, antithetical to that, if we take a look at it, let's go back in time a little bit. We'll just find any period in time. We'll just go back. And then let's see what happens the majority of the time when price gets under the cloud, all right? And that's bearish. Okay, so let's go back over here. All right, so we go back to March 5th. You can see from that point, it actually dropped approximately 31.48% in 29 days. Once it got back above, it started moving up. We can go back in time even further. Here's another time when price got above the cloud over here. And if you measure the move to, all the way up to this level up here, that's a 429% move for AppLovin in approximately 5.1 years. This is called back testing. Going back and testing, a specific indicator. It could be anything, right? A strategy that you have for entering and closing positions. It could be, but basically what I'm just showing you guys is just how more successful your trades would be if you take the trades when price gets above the cloud. Here's another time, back here in January 2024, January 11th, 2024, if you got in over here where it got above the cloud and you held it, okay, all the way to this high right up here, that's about 122% in 5.8 months. Now, it did break under the cloud there, and then, of course, it dropped. But or when it comes into the cloud or under the moving averages, you do have to be more cautious with your trades, okay? So anyway, I'm just giving you a quick little lesson here. Okay, so CRWV, this is another stock they talked about. Now this one here has been in a decline for a while. Since from June 20th, it actually did drop approximately, 52% in 2.5 months. That's a big drop for any stock or ETF, 52%, think about that. Now, in order to break even, you would have to, let's say you bought down here where it was under the cloud because you thought, hey, you know what, this stock is really cheap. Well, you're going to have to make, just to break even, you're going to have to make a 109% return, okay, because the price is so much lower here at $84. To get up there, you're going to have 186 or whatever. You're going to have to make that much. Right now, we're for the first time here, price did get above the Ichimoku cloud, and it happened on high volume, but I don't particularly like this candle. This is called a doji or a spinning top type candle. It's a reversal candle, so there is a slight possibility that this thing could pull back. And the reason why it's a reversal candle is because that long wick at the top that you see right there, that represents selling that took place. If we switch it to a 5-minute chart, because right now we're looking at a daily chart. If we go to a 5-minute, and we can see here that price did gap up, but then it started to sell drop. Do you see that right there? Okay, so that's what I'm talking about. It didn't consistently move up after. So that's why we've got this. Opening price and closing price are around the same area. Now, so CRWV, I do like it because I did give it a blue flag nonetheless because we do have a future bullish cloud here. That's when the Senkou span A is above That's the light colored blue line is above the Senko span B. The cloud itself projects 26 periods into the future. And then the white line, the Chikou span, is above price. That's the closing price today, projected 26 periods ago. If that white line is above the candle 26 periods ago, that's very bullish. So I like what I'm seeing here with CRWV, but it's going to also find resistance at 148.80. That's that prior high there. So it might make sense to wait it out and see if it can break through that first to get a little more confirmation that this is a real move. All right. Sometimes you'll have false breakouts and then it pulls right back in. Okay. Here's another stock, FNV. Now, Franco Nevada Corporation. It's a gold stock. You know, we all know the gold stocks have been doing really well. The majority, not the majority, but a good portion of the stocks that are in my portfolio are gold stocks. And they've done really, really well. And FNV is not one of them, but you can see here. I mean, it's moved up 30% since, let's see, August 5th when it got above the cloud. So it's been moving quite well here. I like what I'm seeing with FNV. It looks great on the daily. And here's a weekly chart. It looks a little bit extended at these levels. I'm not going to lie. You know, if gold suddenly starts to break down, folks, I mean, it could fall precipitously at some point. But the thing is, there's a lot of demand right now. There's a lot of, whenever there's fear in the markets, and there's uncertainty about where we're heading, because there's no certainty here. Gold is not a bad place to have a, you know, it's not a bad idea to have a position in gold, whether it's a GLD ETF or an individual stock like this. You don't want to put all your money in one specific sector, though, or industry or stock. Okay, make sure you're diversified. JP, let's take a look at the next one, JPM. Now this one happens to be, I mean, I'll just bring it up because they did bring it up on the show, and I did add a position of this stock here, JP Morgan, on August 12th over here. And it has moved up approximately a little over 7%. So it's not a big move yet. It actually pierced, you can see here that price pierced the Tenkan-sen, but then started getting bought up. You can see that on the 5-minute. So you can see pull back on the 5-minute chart, but then started getting bought up once again. I like that. How about LRCX? LRCX is Lam Research. They talked about, I think it was Joe Terranova that brought this one up. So this one, you know, I mean, it's all-time highs here for Lam Research. It's looking pretty good. Let's see, where did it close? It was 133.90, and the resistance level is 133.57. It's just barely above it by a few pennies. It's not really a true breakout as far as I'm concerned. I would probably want to see more volume here, more volume today versus the prior day. If you look down below here, okay, that's a lower volume than the prior day. And the ADX is kind of moving sideways here. Do you see that? It's a slight, maybe there's a slight move up, but it's very, it's not really conclusive. But it was up. The stock was up 2.14% today. And here's a weekly chart for you. You can see how it's kind of stalling here a little bit. Now, let's go to Banco Santander. Now, this one here looks really good. Here's a daily chart. You can see that, I mean, this one is, since it broke above the cloud over here, this is the last time it broke above, because it entered the cloud, found support at the bottom of the cloud, and then took off from there. Once it got above the moving averages, and above, you can see the Tenkan-sen above the Kijun-sen. Let's assume that you got in over here. Okay, you're up 50.55% in a very short period of time, actually. Let's see how, that's about 5.3 months. Whoops, 5.3 months. So that's a place to invest if you're interested in having some diversification in Europe too, since this is a Spanish bank. Now they have banks here in the United States too. So anyway, SMH. This is Van Eck Vectors, the semiconductor ETF. This one here on the daily chart's looking pretty bullish today, actually. I like what I'm seeing with the semiconductors. You can see that it actually broke above that little resistance level, but just barely. There was a little bit more volume today than there was the prior day, but the ADX is still moving sideways. By the way, the ADX, which is that white line, that's momentum, folks. If you see that moving up, that's positive when the green line is above the red line, which is the positive DI9 above the negative DI9. Okay, so it's not looking ultra bullish, but I do like the fact that it's holding up here, up 1.15%. What about Snowflake? Well, this one got a blue flag as well, because price is technically above the Tenkan-sen and Kijun-sen. We've got a future bullish cloud, but notice how thin the cloud is here. Not a, you know, this, and the reason for that is because of the price movement here. You can see that it's been consolidating for a little while. And so it's not really expanding, right? If you look over here, the ADX is dropping. So I wouldn't be jumping into Snowflake here. Plus the profit margins are still negative 33.53% on this stock. All right, XLF, let's look at this one. Financials, ETF, this one's been also stagnant under the 54.25. You can see it's at 53.87 is where it closed today, but it got a flag nonetheless because it's above the Tenkan there. All right, let's keep going. Let's keep going. Remember, I'm only putting a blue flag if they're bullish on both time frames, the daily and weekly. Here's a weekly chart. Okay, so it's above the moving averages there too. Now, the rest of these stocks, there's something off. Okay, let's look at Broadcom. You can see here it's been pulling back and it's currently under both of the moving averages. So although it looks pretty bullish on the weekly chart, and finding some support right here, and it might bounce soon, it hasn't yet. So I'd hold off on adding a position there. Here's Berkshire. On the daily chart, it looks pretty good. Price is above the moving averages. Tenkan-sen, Kijun-sen, the Chikou span here, the white line is above the candle 26 periods ago. However, on the weekly chart, we don't have all the elements of Ichimoku giving us a go. The Tenkan-sen is still the faster moving average. That 9 period there is still under the Kijun-sen, the 26 period, that red line there. Now, price is above both moving averages, okay? And look at the cloud itself. See how it's flat right there? And the Senko Span A and Senko Span B are at the exact same level. That's not really that's not giving me a lot of conviction in this move here. So I would not be jumping into Berkshire at this particular time, all right? Although I think it's a great place to invest. Now is not necessarily the perfect time for it, unless you just want to use the daily chart to make your decisions. In that case, okay, certainly knock yourself out. It's up to you to make that decision. Here's Disney. DIS is the ETF on this one. It's under the Ichimoku cloud right now. It's under the Kijun-sen. No on Disney. Goldman Sachs today dropped under the Tenkan-sen. So it lost its blue flag, and ADX is dropping here. So the momentum is also decreasing, but on the weekly chart, it's still pretty bullish. All right, it looks good. What about LMT? Now this one here, Lockheed Martin, on the weekly chart, it's inside the cloud. So I would not recommend this one here yet. On the daily chart, it's been on a very strong uptrend though. Okay, so again, it depends on what time frame that you want to make your decisions on. I like both of these to confirm, weekly and daily. But if you're like a more active trader, maybe you like to use a daily and maybe a 2 hour. You could do that. There's a 2 hour time frame. Look at that. So it's up to you guys to determine your preference. It's a preference thing, and it's also about how much time you have in the day to be checking on your stocks. You know, I don't want to have to look too many times at my stocks throughout the day. I want to actually have a life and do other things too, right? Here's MasterCard, as much as I love stocks, by the way. And MasterCard, pulling back, finding support at the bottom of the cloud. It's above the 200-day, but it's a no-go here at this level. REGN is inside the cloud as well. So when the price is inside the cloud, it's neither bearish nor bullish. It's really just in a state of, no man's land. It's basically a state of neither, long. It's kind of like what we've got going on in Ukraine and Russia. Neither side is really advancing as they fight the battles that they're fighting right now. They're basically stuck, right? And so that's what we've got here with REGN, basically. Let's go to the next segment here. Mag 7, Tesla. Here it is on the daily chart, looking pretty strong, up 0.34%. Here it is on the weekly chart also, but we're starting to see a little bit of hesitation here in the momentum. Now, you're not seeing it in the ADX, but I'm seeing it in the volume. See, each week, the volume has been declining. There's not as many participants is what that means, really. Okay, so as price has been moving up, we're not getting confirmation by seeing an increase in volume each week, which would be ideally what you want to look for. Apple. Okay, now that one's getting really close to this 260.10. It's that prior high right there from December 27th. I would hold off on this one until it breaks through that level. Here it is in the weekly. That's the daily chart. It's also creating this nice little ascending type triangle or symmetrical type triangle pattern on the daily chart. Here's Meta dropping under the cloud today, down 1.21%. Now, it's going to find some support at this low. 721.73. It's currently at 734.38. But check out this down below. See how the ADX is moving up here, the white line? And see how the red line is moving up and the green line is moving down? This is not good. This is bearish. So this is when you've got that red line above the green line, it's telling us the direction obviously is to the downside, hence directional movement, right? The ADX, the momentum is increasing. The volume is also increasing. But with all that said, if you look at the candle itself, you'll see a little wick at the bottom. That represents a little bit of buying that happened at the end of the day. So if we switch it to a 5-minute, you can see that happened here. So we've kind of like almost found a bottom, at least on this daily, level. You see right there how price came down here. It got bought up, price got pushed. It came right back to that same level. So there's a defense here of big money, obviously, that they're defending this level. All right, that's what's happening, and that's why price bounced off of it, and that's why it continued to move up. Now, do I know what's going to happen tomorrow? Of course not. But all I'm saying is it showed a little bit of strength towards the end of the day, and there's a slight possibility it could bounce off this 721.73 level. All right, that's all I'm saying, and you can see that goes all the way back to September 2nd, of this year. All right, so let's keep going. We've got a couple more. We've got B, which is ticker symbol B is for Barrick Mining Corporation. It's the gold stock. This one here on the daily chart has pulled back, finding support at the Tenkan-sen. It's above the Kijun-sen. That's bullish. Okay, so we've got a bullish chart still. This particular stock, this gold stock, when it got above the cloud, if we measure from this point right here, June 2nd of 2025, it's moved up 59.5%. I'm telling you, the gold stocks are on fire. Here's the weekly chart. Now, last week we had this reversal candle. Okay, this is a weekly chart that we're looking at. And so there is a possibility that Barrick could pull back here. All right. So I would certainly be cautious a little bit with this one. I don't know if I personally would be adding a position to this stock now at this stage, but you certainly could be managing it. And because here's the deal, if this thing comes back down to this level, this support level, that's about a 13.8% drop, just so you know. If you measure from that closing price to this level right here, it's around 13%. So yeah, here's the daily chart though, and I do think that it's got an option, a possibility of bouncing right off that. That happens many times, guys. When price comes to that 9 period, look how it finds support. Okay, it happened over here too. It happened over here, and yeah, I mean it's a strong level of support. Now, next one, CVE, Cenovus Energy Incorporated, oil and gas integrated. Well, we saw the energy stocks didn't do so well today. On the daily chart, it seems to be holding up above the next level of support, which is the 26. That's the Kijun-sen. All right, so you got your first level of support. Think of it as your first defense, right? And then you got your second defense, and then you've got your third and fourth. Okay, these are the support levels of Ichimoku. And right now it's finding support at that second level. It found it back here, okay, on September 8th and bounced off of it. All right, it found it over here for 4 days in a row. Let's count them. 1, 2, 3, 4, and bounced. Over here, just 1 and bounced, okay? Will it bounce again? And will we see this pop tomorrow? Will the energy stocks recover? I don't know. We'll see. Here's the weekly chart. Okay, here's the interesting thing. We've got a future bullish cloud here on this stock, CVE, ticker symbol. But the thing, and it's above the moving averages. Chikou span is above price, but you can see we're currently on the weekly, we are under the 200. See that dotted yellow line right there? That's the 200-day simple moving average. Last week we closed above it. This week it's uncertain what's going to happen, right? We've got 3 days left for this to materialize, to give us a concrete answer. We don't have it yet. So let's wait and see. I think Friday we'll have more information. But again, if it breaks under here again one more day, it's more likely to come back down to this level on the daily chart, and that's about an 8% drop, just so you know. and the volume seemed to be increasing slightly, but we do have a reversal candle here. So that's why I'm slightly optimistic. There's no guarantees in the markets, right? All we can do is look at the information, okay? And these candles do provide a lot of info. They do. They give us some insights on what's transpiring between the buyers and the sellers every day, depending on what time frame you're looking at. Daily, you can do a 4-hour. See, on the 4-hour, it looks more bearish, right? If you look at a 2-hour, it looks even more bearish, but finding support on the cloud. If you look at the 30-minute, it's probably under the cloud, as you can see right here. That's a 30-minute chart. So that's what I'm saying. It's like you do have to pick and choose your time frame to help you with your trading. But right now, I think, for most of us, I think weekly and daily time frames makes the most sense. So you're not, driving yourself insane, unless you've got the time. Like I said, some people, and I've done this before. I've done some day trading in the past, and but it's a time-consuming thing too. You got to be staring at that screen. You could trade this thing on a 1 minute. Switch it to a 1 minute, and you can see how on the 1 minute around 3:15 p.m. this thing started taking off. Okay, it looks like it bottomed out between 2 and 3 p.m. today, as you can see right here. It's so interesting how, depending on what time frame you're looking at, you're going to get a completely different picture. But I think the most, I suppose, popular time frames are the daily and the weekly, and that's what most people are looking at. Guys, that's going to do it for this video. By the way, it took me a while to put this thing together today because I had some technical difficulties. I would really appreciate if you could hit that like button, maybe put in a positive comment in the comment section, and so we can get the algorithm pushing these videos out to more people, right? Let's share this information. Let's get more people interested in Ichimoku and learning about technical analysis of stocks. And if you guys like the stuff that I'm doing here, I also do member-only videos, as you all know. Well, some of you. If you're coming to this channel for the first time, though, you wouldn't know that. So here's my Blue Cloud Trading page on YouTube. It's free to subscribe. You click that subscribe button, maybe hit the notification bell so you know when I'm posting a new video. And then I'll come up in your subscriptions here, all right? Now, this is the last video that I did, the members-only video 3 days ago. I go over my entire portfolio. That was a 1 hour, 13-minute video. I went over my entire portfolio. I also gave 22 new stock ideas for this week. And then, I try to give some insight on entries and exits, why I'm doing what I'm doing. And you'll see, once you become, to access this video, you click the button right next to subscribe. It's called Join. When you do, this little box pops up. You can become a Blue Cloud supporter. Now, you won't be able to see that video under this level, though. All right, if you just hit the join button, you won't be able to see it under this, but you will be supporting the channel. Under Blue Cloud Trader, you want to select this. Yes, you will have access to that video and other older exclusive member-only videos. Now, what about Blue Cloud Legend? You can go to this third level. Now, all of a sudden, you have those exclusive member-only videos, some of my recorded day trading videos, as well as daily trade updates, which I post. It used to be under the community tab. Now it's under, once you become a member, there will be a new tab that pops up right here next to posts. It will look like this. Hold on one second, guys. Give me a second. Okay, there we go. So now you can see that there's the new tab, membership tab next to posts. You'll be able to access it there. You can also click the join button link right here. And then if you like the software that I've been using, the TC2000, that's this right here, this type of software, which allows you to create watch lists, move your, add any stock you want. You can check out your mutual funds. You can do all kinds of things with it. Basically what you do is you click here, 9 more links, click on that. That will bring up this little page. You can read about my channel, scroll down. There's a whole bunch of links here, including my Twitter page. There's the $25 coupon for TC2000. So you can get that software from here. And basically enter your email. You download the software for Windows. And then let's see, what else? There's other things here too. Once you've actually have that software, you can actually set up to this automatic TC2000 layout so that it looks like mine. All right, because it does take it's a little bit time consuming to get it to look exactly the way I've set it up. I did this myself, okay? It doesn't come up like that automatically. So what you would do is once you can click on that other link there that you just saw. See this TC2000 chart layout right here. And when you do, and by the way, you can also see that right there, that coupon, whatever. You import the chart template. See that button? Click on that, and then you'll be able to import it. All right. That's going to do it. And by the way, they also have a brokerage account here. You can trade off the charts. It's great. It's fantastic. I've been using TC2000 a long time. I like it a lot. It's fast. It's easy. Once you get kind of acclimated to it a little bit, there's a little bit of a learning curve. But overall, I found it to be the easiest one to work with. All right, guys, have a good rest of the evening or day or morning, wherever you're from, because I know there's a lot of viewers from all over the world, basically. We've got people from Japan. We've got people from England, Australia, India, China, everywhere. I love that. I love that. And, oh, in the comment section, if you're not sure what to say in the comment section, just let me know where you're from. I'm curious. All right, guys, I will catch you all in the next video.